Morning, ladies and am I audible, Sarah? Sarah,
Yes, you are
hear me
audible.
clearly? Oh, superb. Right. Thank you very much. And once again, good morning, everyone. And thank you for joining Budget Highlights 22 organized by BDO, especially focusing for our clients and stakeholders. And as you are aware, Honorable Basil Rajapaksa, as a Minister of Finance, he presented the budget proposals for the year 2022 last Friday. Everyone was expecting a lot of things to happen, especially about policy changes. But you would have noted, there were hardly any policy changes, which was a really welcoming note for, especially for corporate sector and even we being practitioners. Apart from that, you need to understand why the budget is presented. Basically, it is to plan the economy, especially the financial resources required for the next fiscal year. And we are also aware, because this should have been the most trickiest and the difficult budget that the Sri Lanka would have presented for last, many decades. Why do I say that? Because the whole country and the whole world was suffering from a lot of setbacks, including pandemic. As a result, the economic indicators were basically at a critical juncture. So which is also important. Inflation is rising due to obvious reasons, because shortage of various raw materials and things like that, not because of the local, but because of the global issues. And financing has become a major issue because of the fact, again, there are limited resources, and there are a large amount of debt payments, going to be there next year, 2022. But midst of all that, you would have seen where the proposals, especially for tax proposals, are very limited. There would have been even handful of proposals for tax. But mainly, I have noted the Honorable Minister is expecting a lot of savings and things like that, efficiencies from the government, state-owned enterprises, and even private sector, through which the government is going to raise funds. When you say raise funds, obviously, if you have some kind of saving, it is saving. So through which, because you have seen, especially one particular item is 30 billion that he's expecting to have from savings, whereas he's going to finance that amount probably to pay salaries of principals and teachers who have been having major issues. And I don't think that I should spend that amount of time, because since we have lined up excellent speakers, BDO always gives some value addition to our customers and clients and stakeholders. Our tagline is exceptional client service. Today, we have very limited it's my duty to welcome, while welcoming each one of you, special welcome to Dr. Kapila Senanayake, Director General, Department of Fiscal Policy. Very, very busy person at this moment. In fact, Mr. Article told me that, please you take Dr. Kapila, because of the fact that he is a man, who have been behind all. He is a real technocrat. Welcome, Doctor. And also we have Hapu Arachi. I call Hapu because we knew each other for a long time. He is the Deputy Commissioner General, Department of Inland Revenue. And those two basically, we can say that regulators. And apart from that, also we have invited another two important personalities from private sector. One is Nilanthi Sivaprakasam. She is the Chief Financial Officer at Conspens PLC, although she is a CFO, but she wears so many other hats. So thank you very much, Nilanthi. Welcome. And Hasita is going to join us a little later, but still it's my duty to welcome Hasita as well. Hasita Premaratne is the Group Finance Director, Brandix, who have been really helping us in various things. Whenever we expect Hasita to come, Hasita is prepared to come. Thank you once again, Hasita. And apart from that, technical input from my two, the great, again, ladies, Sarah, of course, is partner tax, my firm, and also Dinusha Rajapaksa, associate director tax. So Also, we have my deputy managing partner Ashin Jayasekar, who will take over from me after my introduction of Dr. Kapila. So let me tell. I know he will feel very shy when I'm going to introduce, but it's my duty to introduce who Kapila is. Dr. Kapila Senanayake is the Director General, Department of Fiscal Policy of the General Treasury, and he joined the Treasury way back in 2002 and worked in the Department of National Planning before joining the Department of Fiscal Policy again in 2008. Dr. Senanayake has a 13-year experience in fiscal policy area and also represented Treasury on the boards of several key state-owned enterprises and statutory boards. At present, Dr. Senanayake is serving the board of National Savings Bank, NSB, Institute of Policy Studies and Board of Investment of Sri Lanka. He holds a Doctor of Philosophy PhD in Economics from the University of New South Wales, Australia, and Master of Public Policy from University in Japan. I think he has got all attributes to make keynote speech. Dr. Kapila. Over to you. I think we will listen to him. Then I will hand over baton to my deputy managing partner here, video. Ashen will take the rest of the proceedings. Doctor, over to you. Thank you very much. I know that you are so busy. While you are busy only, I think you got connected. Thank you once again. I'm sure that after this you may leave, but we will also expect if there are, any couple of questions that we will post it to you, then you can leave. Thank you very much once again. Over to you, Doctor.
Thank you very much for your kind introduction, Mr. Sujiva Rajbaksha. And I think this is the second time I joined this group webinar. So I really appreciate and admire your commitment and all these things. So, and also I would like to thank again to invite me to address you in this sort of speech. So, as you clearly explained, it's very hard time, not only Sri Lanka, but all the other countries in the world. The inflation is rising and debt to GDP is rising and deficit is rising and and also the financing is really tough this time. So with that, I'll start my keynote speech. It's my absolute pleasure to deliver the keynote speech for this webinar on Budget Proposal 2022, organized this your organization. First of all, I wish to congratulate BDO Sri Lanka for organizing this webinar to create a platform to discuss the proposal that contained in the budget just presented to the Parliament. I think Ms. Sujiv explained last Friday. So it's still a hot topic. It is always great to see the business sector actively engaging in discussing government policies and ascertaining their impacts to the business sector. Your responses to the policy proposals contained in the budget 2022 will help to guide us, like us policymakers, to better maneuver the policy for the benefit of the great good of all stakeholders, including yours. Therefore, I wish to thank the BDO Sri Lanka for inviting me to be a part of this distinguished forum and share my insights on the impact of 22 budget proposals on the business community and our society at large.
Doctor, just to post to that, Doctor, excuse me, Doctor.
Yeah.
The line is not very clear. Just look at whether your internet connection is stable.
Okay. Let me see. Ms. Salbaksha, am I audible now? Ms.
Yes,
Rajbaksha?
doctor, you're audible. Your video is
No.
not.
Okay, yeah.
So can
Switch off
I?
the video.
Yeah. So
Now you put.
I think first part, I think you have. I don't want to repeat it.
Yeah, we have. No, you don't have to.
Yeah. So
Yeah.
sorry for
Please
this
go ahead.
technical clash. This budget 22 presented a series of well thought out proposal. It covers
No.
revenue.
Still you have issue, doctor.
Oh my God. Oh. Let me see.
Doctor, we can't hear you.
So can you hear me now?
Yeah. Now I think you can. Yeah. Now it's okay. Go ahead.
Okay. Sorry for this disturbance. Anyway.
Right. Go ahead.
So budget 22 presented a series of well thought out proposal covering revenue, expenditure, and other policy reforms. These policy proposals are concentrated on fiscal consolidation with the view of enhancing revenue and rationalizing expenditure. As of 2020, the budget deficit has increased, as you explained earlier, 11.1% of GDP, which is very high, whereas total debt to GDP ratio increased over 100%. So government expect to reduce budget deficit to 8.8% in 2022 next year and gradually reduce to 4.8% in 2025. A balanced budget will be made into a reality by 2028. That's the government ambitious target. In the same vein, the government debt is expected to be reduced to 89.2% in 2025 and contained to 60% by 2030 as per the Fiscal Management Responsibility Act. In order to achieve such fiscal targets, the government revenue needs to be enhanced, as you all know. So government remains committed to keeping the tax policy reform introduced since November 2009. That's why you explained that we have just a handful of tax reform this year. These include the reduction of taxable threshold and tax rates, particularly on income tax and VAT, with a view to boost small and small scale enterprises and promoting savings and investment. In this context, new revenue sources have to be explored that would put minimum burden on the ordinary taxpayer. Two one-off taxes were introduced in budget 2022 to seek revenue from the high profit earning individuals, firms and sectors of the economy that were largely unaffected by the pandemic. We request the business sector not to take this as a discouragement of their high performance, but rather as a way of contributing to the government finances in this difficult time of need for delivering essential public services and investing in the key sectors of the economy. The social security contribution applied on the turnover at the rate of 2.5% was introduced with the view of obtaining contribution of the business community like yours to rebuild the economy in the post-COVID environment. Budget 2022 also contains number of proposals to boost private sector participation in the economy. Private sector contribution will be obtained to reduce district level disparities on access to health and education services by encouragement of the private sector to establish an international school and also the hospital in each district through the provision of required lands and tax concession. I think it's a good move. Further, investment will be obtained through public-private partnership to implement mixed development projects using land owned by Department of Railways that are currently not being fully utilized in a productive manner. In addition to the above, the budget proposal contains a number of initiatives to encourage new product development and establishment of new startups. In a never before seen move, the business registration fees are waived off for registration for new businesses in 2022, and it is further proposed to consolidated fees levied by various institutions on business registration. On the other hand, the government has introduced new move to kind of encouragement for the production economy. The uplift in the production economy was among the key priorities of the budget. The capacities of the production economy was to be enhanced through establishment of new products as investment zones, as explained in the budget. These investment zones are to be established focusing on production of organic fertilizer, pharmaceuticals, raw materials for textile. We have already established the fabric zone at Eravu, and apparel industry, rubber industrial production, export-based agro-processing, livestock, agricultural equipment and machinery, fisheries, and all the IT sector, sports and steel and heavy metal industry, covering all major sectors of the economy. In addition, production will be diversified and value addition will be further promoted, especially catering the export market, while also focusing on local production of import substitutes through the ventures. In this regard, expansion of international market-oriented production of fruits, vegetables, fish-based products, liquor, liquid milk, and commercial crops, enhancing necessary knowledge of flower growers in the context of growing flowers and foliage for the export market, promoting local handloom and batik industry to become $1 billion earner by 2025, enhancing Sri Lanka's share of gem and natural mineral resources in the global market, promoting Sri Lanka as a center for wellness tourism, and establishing new Ayurveda treatment centers are recognized as key strategies. This process will be facilitated through enhanced use of technologies such as blockchain to strengthen internal system by improving the efficiency, operation efficacy, and expenditure management. The adoption of technology will be facilitated through the technoparks that promote techno-entrepreneurship driven economy and high-tech agro-parks that produces new agro-entrepreneurs through provision of uncultivated land to women and youth. In addition, the government is also focused on attracting foreign direct investment, and it will take steps to review the procedures followed by the Board of Investment in attracting FDIs in the country. As you know, the FDI attraction is very low comparing with other countries in Sri Lanka. In addition to the above, services sector will be enhanced, focusing on encouraging exports of services through rebuilding of tourism sector, expanding IT sector, promoting opportunities for business process outsourcing, and developing port and airport related services. Budget has also brought forward a number of proposals to reduce unnecessary expenditure of the public sector while enhancing the efficiency of the public service delivery through digitalization, client centers focus, application of key performing indicators, and results-based monitoring. I think this is the first time that the government is going to introduce so can I hear? Hello?
Yes, we can hear you. Continue, Doctor.
Right. Okay. Thank you. In addition, public investment program will be also fast-tracked, maintaining efficiency, effectiveness, and transparency. Initiatives such as e-procurement will facilitate this while limiting grounds for corruptions. This proposal will assure that government will be a facilitator of production economy. In addition to the above, and despite fiscal constraint posed by pandemic-induced conditions, government is committed to further enhance the infrastructure development of the country. So I am not going to explain in detail, so it's clearly explained in the budget 2022. This proposal is spelled out above among many other presented under budget 2022 attempt to transfer our economy into an advanced manufacturing economy driven by innovation. The economy that we aspire to build will have uninterrupted access to facilities that enhance the performance of industries and businesses. Further, it is expected to revise the traditional laws and some archaic regulation that hinder production. It is expected that the budget proposal will set the path to achieve an economic growth more than 6% during 2022 to 2027. We expect economic growth of 5% next year, it means 2022, to achieve a trade surplus of USD 1,000 million in 2022 and reduce budget deficit to 8.8%. This is facilitated through the economic development model introduced under the budget that provides growth opportunities for individuals and businesses, while expanding the tax base together with an increase in tax compliance among individuals and businesses. In addition, development expenditure, that is public investment, will be increased to 7% in 2027 from the present level of 3.5% of GDP to 6% in 2024 and 7% in 2027. So these are the government's goals for the coming years. This aspiration would require the utmost support offered by the business community like you and industries, and we firmly believe that we can make the necessary changes in the public sector to facilitate the production industries and thereby economy guided by this part towards prosperity in coming years. So thank you, Mr. Rajapaksa, again, and thank you for listening to me. Even though it's very, there was a technical glitch as well. So we have to accept all these things as well in the coming years. Thank you very much.
Thank you, Doctor. Thank you very much. I think you took us through the, the broader perspective, of the budget and the expectations and many more things. And certainly we can release you within next 5 to 10 minutes. Let me ask my, the Ashen Jayasekar, my deputy managing partner, to probably there may be few questions. Ashen is he's in our firm responsible for risk advisory services, forensic audit, information system audits, and many more things. Ashen, over to you. You can utilize his valuable time, and you may release him after you do the needful. Over to you, Ashen.
Thank you, sir. Good morning, everyone. I can see there are a few participants from overseas. So good afternoon or good evening, depending on where you are. Thank you, Dr. Kapila, for your wonderful analysis and presentation of the budget. Of course, the government should be commended for their steadfast commitment to ensuring that there is policy stability, because we do not see any significant changes to the overall tax framework or the tax rates. Having said that, Doctor, there are a few questions from the audience which I would like to pose to you. I am aware that you have another engagement to attend, and we will release you as soon as possible. But if you could just take these 2 or 3 questions that we have, that will be great. So the first question is, when you look at the budget proposals presented by the Honourable Minister, there are lots of expenditure related proposals, which of course are related to COVID relief and so on. Now, given that our budget deficit is 11%, and it is envisaged that it will be reduced to 8.8. Given the current economic situation, how realistic do you think is it to expect a decrease in terms of the deficit to GDP, bringing it down to 8.8%?
Thank you very much for this question. I think it's a really excellent question. So as you all know, the present deficit ratio is 11.1, is very high, like it's very it's a really burning issue. So because it has impact to our debt level, and also it becomes financial difficulty, and then we have the current account deficit as well. So Sri Lanka is having twin deficit, that is budget deficit as well as current account deficit. So managing this is really at more difficult, and also unprecedented level compared to previous years, because of this ramification effects of the pandemic. So it has really affected the businesses, government, and all stakeholders, even especially the poor people. And this target of 8.8% from 11.1% is achievable with this budget proposal. For example, we have introduced 2 one-off taxes, and also there is one VAT on financial services, and there are some other tax proposals to introduce kind of licensing fee increase, and also other related items. So that's also incorporated to this revenue enhancement measures. So for that, we have to increase. We already know that our tax compliance rate is very low. It's about 56% or 60%. So we have to increase that tax compliance rate as well, and also we have to strengthen the tax administration. So now, since January 1st, 2022, we are going to introduce the goods and services tax. We will receive about 50 billion from that tax as well. So including all these things, we have this revenue enhancement measures, even though, as you explained, that we haven't changed this tax structure introduced in the latter part of 2019. We have just introduced very few adjustments. In terms of expenditure, as you clearly explained, our expenditure, especially the recurrent expenditure, is very high. Our interest expenditure to revenue ratio is over 70%. So if 70% goes to pay the interest payment, only 30% left for other purposes. So that's why we have to manage this recurrent expenditure, and also the expenditure on salaries and wages are very high. So that's why government has a keen on the policy that that new recruitment will not be occur in the coming years. So I think that's we have to admit, considering the large strength of public service. I think we learned that during the COVID time, we don't need this sort of people now, because we can reduce nearly 1/3 of this present public service strength. So if we were going to introduce some digitalization, so with that, I think we can contain deficit to 8.8% in 2022.
Dr. Senadayaka, now you mentioned that new recruitments will be halted in the government sector, but then again, you see the government extending the retirement age to 65. Don't you think that this may lead to additional spending or expenditure by the government?
No, I think extending 65 years, we may have a saving of like payment of pensions, but it's still under discussion. So this all spectrum will be reviewed by a committee. So we'll see then. Yeah.
Right. The other question, of course, is on how to bridge the deficit, given that, it will be difficult to access overseas financial markets. Naturally, the government will have to bridge this deficit by accessing the local domestic finance market, which means that there will be an extra demand on credit by the government. Looking at the interest rates, how do you see the interest rates moving in the short to medium term? Do you think that there might be further pressures on the interest rate, and the downside of it could be that there might be overcrowding by the government, where the government borrows heavily, and that may limit the funding available to the private sector and impede private sector growth? So how do you see the interest rate moving in the short to medium term due to these budget proposals, the impact of it?
Yeah, that's good question. So if you have a large budget deficit, it will help to increase interest rates, and also it has also impacted to external sector, also the current account deficit. So when you look at 2020 and 2021 performance, we largely heavily reliance on domestic financing rather than foreign financing, because we are in difficult to having foreign financing with this difficult local and also the international environment, and also it has also impacted on this investor downgrading. It also really has a negative impact on seeking foreign assistance. So considering and also the other exposure to foreign debt, like when you look at the debt, exposure to foreign part has reduced to 40% from about 50%. That's also a good move. But when you look at the 1-year treasury bill rates, it seems that there is a kind of will be a rise in interest rate in the shorter term. So we can see that looking at this treasury interest rate. So that is the issue is there, but government is looking other revenue, so other sources of inflows, because we don't have much tourism money, just and also the worker remittances, we had 7 billion, now it's nearly 6.5, and so, and so FDI inflows also very limited, but I think FDI will increase with the port city development projects. So then there is a plan to swap agreement with Oman, Bangladesh, India, and other countries. It will strengthen our reserve position. So once it will be strengthened, the interest will be will be stabilized in the mid of 2022 onwards.
Right. Dr. Serenaka, there is one more question, if you can just bear with us. This is, of course, on the EPF and the extension to the retirement age. So one of the participants would like to know whether if the retirement age is taken up to 65, whether they'll be allowed to withdraw their EPF at 55. I think this is a question on most people's minds.
Yeah, I think
Retirement age.
Yeah, for the time being, frankly said, we haven't taken any firm decision yet. It's a budget proposal. So once we have finalized that age limit, we can discuss this in details, I think.
Right. The next question is on this this surcharge tax. There is a list going around with the names of about 62 companies who might be liable for this tax. Is it what I want to know is that whether this is a government sanctioned list or whether it's one of those lists published by investment brokers, because it lists out 62 companies. This tax is applicable to listed as well as private companies, isn't it? Who exceed
just the thing is not companies or both companies or individual, but the threshold is 2,000 million. So I don't know the this list or something. I'm not aware of this list really.
Okay. So Dr. Serenaka, I think we can now release you. Thank you so much for your elucidation on the budget proposals and for being here with us today. We greatly appreciate your keynote speech, and thank you for being here. So now we can release you, Doctor.
Thank you, Mr. Rajabaksh and also Darshan. Yeah, so it's a wonderful experience for me. So if you have any more questions, so you can email me or we can discuss in later. Thank you very much for this opportunity. Thank you very much.
Okay, thank you, Dr. Sen.
Thank you very much.
Okay, bye.
Okay.
Bye. Good day.
So the next session is on the budget proposals. So to decode all of this and to present the analysis, we have two of my colleagues from BDO, Ms. Sara Afka and Dinusha Rajapaksa. So before they commence their presentation, I will very, very briefly tell you a little bit about them. Sara, of course, is the tax partner of BDO Partners. She has extensive experience in the field of taxation. Prior to joining BDO, she was at KPMG Sri Lanka. Sara is an associate member of SEMA UK and CA Sri Lanka. She serves as a member of the CASL tax faculty, the tax committee, since 2018, and currently she co-chairs the CASL transfer pricing task force. Dinusha, who is an associate director, who will present to you today on carry out a sectoral analysis of the budget proposals. She, of course, is an associate director and a member of CA Sri Lanka. And despite being a chartered accountant, she is also an attorney at law and holds an LLB. Prior to joining BDO, she used to work at Ernst & Young. So now I would like to invite Sara, who will present to you first, and then Dinusha will take over. Over to you, Sara.
Good morning, everyone, and welcome to the budget highlights. Yet again, from video, I will take you through, as I mentioned, a couple of revenue proposals. I think Dr. Senanayaka took us on those in at a very macro level. What I will hopefully try to do in the next couple of minutes is distill these into what are the areas where there are concerns and possibly how it will impact each and every one of those qualified criteria people, and we'll take it from there. So at a very, Is my screen visible to everyone? Okay, all right, I think. Okay. So at a nutshell, the tax proposals were, firstly, when you look at the government's long-term objective, they are looking at the 9% of GDP from the tax collection at the moment to double to 18% by 2027. That's a very ambitious target, and how that is going to be met will be hopefully envisaged in the next couple of budgets, as well as how the administration is strengthened. The good thing about the budget, as was mentioned earlier, is there was a policy statement last year saying that policy consistency will be maintained in the areas of taxation and rates, as well as chargeability. That is to continue for income tax, VAT. There was a lot of speculation. Most of us have had this conversation where the payee will come back, where the WHT will actually be reintroduced, but none of those changes will be reversed, and it will continue as is. Of course, there were one-off taxes, two one-off taxes that was introduced. One was the surcharge tax, and of course, there will be a temporary hike in the financial VAT. There's also a social security contribution, which is a revenue-based tax that has been introduced in the budget, and the special GST, which is a composite tax, which was actually spelled out last year, which is going to be introduced from next year onwards. The budget also talks very heavily on tax administration and digitization, and to strengthen both of those as well. So if at a glance, if you try to understand what the new revenue proposals are, the largest, as you can see, is from the Social Security contribution, which accounts for 42% of the new revenue proposals, not the entire budget, but from the new revenue proposals, closely followed by surcharge tax, which accounts for 30%, and of course, special GST, which accounts for 15%. Coupled by a couple of other proposals that were announced. So together with all of these, we're going to run through very quickly what the new taxes are, what are the revisions that are going to be effective from 2022, and how it's going to affect all of us. So the surcharge tax, the big fish. In very simple terms, it will be imposed on any individual or company who has a taxable income of 2 billion rupees or more in the year of assessment 2021. So according to the budget, the base is not too clear, but it is assumed that it will be 25% of the taxable income. And there is no mention of how it's to be paid, and so on and so forth. But the introduction in policy is that it will be on anyone who reported 2021 taxable income of 2 billion. So what does that mean for entities? You may have already computed your tax and paid your final taxes by the 30th of September. So there's a little room for any what shall I say, any adjustments at this point. And the taxable income being the base is also something that is, it's not something that we haven't seen in the past. We will do a comparison very soon. But the fact that they mention it as surcharge tax is a little different to how we've seen surcharge taxes in the past, where surcharge taxes have always been a surcharge of the income tax payable. But this tax mentions it as presumably taxable income. When you make this payment, is it something that can be expensed? Is it something that will be deductible for your income tax workings? Is something that is a cost that needs to be clarified? And because it's a tax on an individual or an entity level, there may be entities within a group where you have multiple entities within a group that make this that have met this threshold, for example, and if by any chance a subsidiary is going to redistribute, or has to redistribute it, because it's the past we're talking about, dividends to the parent entity, and the parent entity as a result reports a 2 billion taxable income, because now, as you are aware, dividends are liable in the hands of the shareholder. So if the parent entity, being the shareholder, includes this income into their taxable income, and as a result the 2 billion is crossed, this tax could be taxed at multiple points across the chain within the same group, which will impact the ultimate shareholder. So that is another cause for concern on the surcharge tax. So we've heard of something called super gain tax before, which is very, which sounds very similar to how the proposed surcharge tax is going to be imposed. So just done a very quick comparison. This was something that was there in 2013. The base year was 2013-14, where the tax was still on 25% of taxable income, but whoever who was liable was actually liable if, in the case of super gain tax, if the company or the individual had a post-tax book profits as per the audited accounts of 2 billion or more, or in the case of a group, we took the aggregate PBT, where it cost 2 billion, the individual entities made the payment. So in contrast to that, the surcharge tax appears to be on taxable income. Hopefully that is correct, and that will hopefully be clarified as such. But again, the payment dates previously, because of the volume and the size of this particular payment, there were 3 equal installments that were granted for the payment of the super gain tax, whereas the surcharge tax, the payment dates are not yet specified. So these are little things that probably need to be factored in when drafting the regulation on surcharge tax. The other new tax, again, like I said earlier, this was a tax that was pronounced in the 2021 budget. It was called the special GST, a composite tax. This was what was pronounced in the last year's budget as a composite tax to replace multiple taxes imposed on industries which are engaged in alcohol, cigarette, vehicles, telecommunication, betting, and gaming. So according to this budget, the budget basically says that the new special GST will apply on all goods and services that are spelled out in the Act, and we presume that it will be on the same sectors that were originally proposed. The effective date would be the 1st of January 2022. The concern as to who would administer the SGST, because currently these industries are administered by various administrative authorities, and whether it will be coming under one or the respective authorities would continue charging the taxes would be something that would be need to be clarified. There was also a couple of excise duty changes that were made in the budget in the case of basically cigarettes and alcohol. Would those rate revisions be dispensed with the introduction of the special goods and services tax in January 2022? Just to see what the current tax structure is on the proposed sectors, we have liquor, which is currently liable to VAT and excise under the excise ordinance. Cigarettes, which is liable to VAT under the excise duty special provisions, as well as the VAT law. Telecommunication, there's VAT, telecommunication levy, and then there is a cess. Betting and gaming, there is a VAT, there is a tax on gross collection and an annual levy. And motor vehicles, which come under the chapter 87 of the HS code, there is excise special provision. So the good thing about the special GST going back is the fact that it will be easier for people to understand how the tax structure actually works on these sectors. So it is a welcome move towards tax simplification. But of course, if it's going to be a composite tax that's going to replace the multiple taxes, then I'm a little curious as to how the 50 billion from that on the revenue targets would actually have be brought about, because we're talking about replacing taxes as opposed to hopefully a rate hike on these industries. The other new tax, I think this is the catch-all, is known as the Social Security Contribution. The technical notes refer to a 3%, but the budget speech refers to a 2.5, and we will take it as 2.5. What the chargeability will be on any person who has something called a liable turnover of more than 120 million per annum. Unlike the surcharge tax, this will not be a one-off tax. Rather, this will be something that will be a recurring tax. So questions, what is liable turnover? Now, we've seen this concept of liable turnover in good old NBT, and there were quite a few exemptions and exclusions that were mentioned in the NBT law for certain sectors, in terms of depending on their importance and the strategic importance of their business to the country. So maybe there would be some level of exemptions that would be granted. Nothing that we know of at the moment. For the time being, all that the budget says is anyone who has liable turnover of more than 120 million per annum would be liable at 2.5 from the 1st of April 2022. So again, the question of whether this can be passed on to your customers, and if so, if the customers can claim the input to avoid the cascading effect, is also something that we would have to see once the law is out on the SSC. On value-added tax, there was an exemption that was pronounced for the importation or supply. This is a pandemic-related exemption, actually a very welcome one, on medical equipment, machinery, hospital furniture, drugs and chemicals donated to the government hospital or the Ministry of Health for the provision of health services to address any pandemic or public health emergency. Of course, it has to be approved by the finance minister on the recommendation of the secretary to the Ministry of Health. So it's not for anyone who imports this, but you need to get the relevant approvals and meet this criteria to qualify for the VAT exemption. Financial services, I think the banking and finance sector was unaffected by the changes or the rate revisions in the 2019 wave of reforms that came about. The VAT on financial services remained at 15 despite the VAT rate going down to 8 for everyone else. But the budget actually talks about a temporary rate hike on VAT on financial services to 18% for the year 2022. So from the 1st of January 2022 until the 31st of December 2022, the FinVAT rate would be 18%. There was a special remark that the additional burden cannot be passed on to the customers or cannot be charged on to the customers. So in the case of the bankers, I think this in addition to the other taxes I mentioned would be the additional tax burden for the financial services industry. There were also a couple of revenue administration, tax administration related measures from both for the Inland Revenue as well as the customs. I'll take you through that. As we are aware, the RAMIS was introduced about half a decade ago, and the budget made a firm commitment towards fully implementing the system expeditiously. There was an online payment platform that was introduced last year, and the budget commits towards integrating all banks and financial institutions towards the online payment platform. Pretty progressive move, if I may say, because I've tried it myself and it's quite easy to make your tax payments online. So hopefully this is something, a very welcome move towards digitization. Another very welcome move was the mechanism to examine the accuracy of documents and to allow people to present digital invoices and documents as valid documents where possible to the IRD. So again, minimizing paper is something that is a good move towards sustainability as well. The budget also spoke about introducing something called digital identification numbers and the statutory provisions to enable such an introduction, as well as legal provisions to apply technological process to administer or towards tax administration is something that the budget spelled out. And like every what shall I say, in terms of consolidation, the large taxpayers constitute, according to the budget, 80% of the turnover collected, and the budget actually talks about consolidating the LTU units into one consolidated unit to ease both compliance and administration at the Department of Inland Revenue. As regards Sri Lanka Customs, there were a couple of administrative amendments that were proposed as well. One was to update the HS code systems that we currently use to avoid any deficiencies that may occur in charging the customs duties. A single window system would be established to facilitate the import-export process by integrating all the institutions that work with the Sri Lanka Customs into one system. So this will also enable, what shall I say, us to maybe go up a little bit on the doing business ranking, because it will minimize the time taken to get these processes up and running. In the case of exporters, the customs, there was a proposal to grade exporters and to provide free customs facilities to exporters with a high grading. And that, again, is something that is very welcome from the exporters' perspective. And in terms of clearing, again, there's been a couple of glitches here and there, and the budget actually talks about simplifying customs and cess rates together with the licensing mechanism for imports rather, excluding certain industries, certain HS codes pertaining to liquor, cigarettes, motor vehicles, and domestic agricultural products. So customs clearance will be provided once the imports have been cleared by the standards institution and the quarantine authorities. So that is to ease the clearance process at the customs on imports. There were a couple of other levies as well as non-tax income that was spelled out in the budget. One of the key areas was the increase in excise duties. The rates were pronounced overnight. The cigarettes are currently taxed on excise under the excise special provisions, and liquor under the excise ordinance. So the rate hikes are actually upward revisions. The rate revisions are currently effective. My question would be, what would happen on the rate hikes after the special GST would be introduced? And we presume that it would be absorbed into the SGST, and that is probably something the way it's going to be administered. In the case of excise, there's also a move towards simplification of the digital revenue systems. for the excise department to improve the efficiency and to simplify the excise licensing process, that is to get your liquor licenses. There would be some level of digitization that will be implemented into the future. Motor vehicle related levies and charges. This is very interesting. We've seen it in the past as well. There have been a couple of proposals to make sure that people are a little more careful on the road and you're not just haphazard, reckless. And this budget also talks about it. There is a proposal to impose a charge on motor vehicles meeting with an accident, and the amount can be, of course, indemnified by the insurer, and it is to act as a deterrent for the large number of motor vehicle accidents that take place in Sri Lanka. There's been no mention of how much it would be, but the policy is that such a charge would be introduced. There's also another fee, again, no mention of the amount, but in principle on vehicles that are subject to modification, alteration or refurbishment, there will be a fee that will be charged, and a couple of other those who've not been here holding on to their vehicles, unauthorized roadworthy motor vehicles and motorcycles, the legalization can happen as long as you make a penalty payment within a certain amnesty period. The motor vehicles that are not registered currently and are unauthorized to be used will be allowed to be registered. And if there are any motor vehicles that are stationed at the Sri Lanka Customs, subject to the payment of the tax and the fine, all the motor vehicles that are parked in are basically held up there will be released to the people. So that those are the changes on the motor vehicle related levies. We saw this accounted for 4 billion of the new revenue proposals that was pronounced. There were two sector-specific licenses that were also set out in the budget. The first one being on the leisure sector, where the budget mentions that a special license will be issued under something called a GST for areas that have been developed as special zones for leisure activities. So you need to pay that in order to get the license for that particular zone, I believe. And in the case of the TRC, licenses issued for telecommunication services, such as fixed telephone operations, mobile internet service providers, and satellite broadcasting. It will be done by way of an auction to ensure transparency, and even the 5G frequencies will be sold by auction to ensure fair play. The Finance Act, again, very, very welcome move. There's been very complex business registration processes in the country at the moment. There are mutually exclusive processes adopted by the BOI, the Foreign Exchange, the EDB, and each one has independent fee structures. So the budget pledges to remove these complexities by consolidating all such processes and fees through an amendment to the Finance Act. And there was also a proposal on facilitating free ports in Sri Lanka, and that would also come in as a revision to the Finance Act, with a view to make Sri Lanka a naval hub, taking advantage, of course, of our strategic geographical location, which is central to the shipping routes connecting East and West Asia. For entrepreneurs, again, the budget spoke about the removal of a business registration fee, which will basically be dispensed with for the year 2022 for new business ventures. And again, a very welcome move for the perspective of the micro SMEs and entrepreneurs who are looking to facilitate, or rather who are looking to set up their business ventures or keep it running. That's for me, and my colleague Dinusha will be taking us through the sectoral analysis of the budget 2022. Dinusha, over to you.
Thank you, Sarah. Good morning, everyone. Just going to basically just give a small snapshot of all the numbers with regard to the revenue proposals and how it impacts our budget deficit, and then also a little analysis about how each of these taxes would impact different sectors. So on the budget 22, this is basically a snapshot of the revenue proposals that were made. And if you look at the numbers, the budget estimates that the tax revenue will increase by 50% from the 2021 numbers. So like Sarah just mentioned, there are very few changes with regard to income tax and VAT. So just on income tax, the estimates are that 68% would be, there will be an increase of 68% from income taxes, which means that there should be more economic activity, more businesses starting, more profits, which will then translate into more taxes. So given the current pandemic, let's all hope that this happens and we can achieve the 50% tax revenue increase in 2022. And then also taxes on goods and services also to increase in the coming year. This, of course, will be because of the increase, at least, should be because of the social security contribution, which has to be paid by companies that are making more than 120 million per annum. So that will cover a large group of taxpayers who will then contribute to this increase. And since it's on 2%, 2.5% on turnover, I think it should bring in a significant amount of revenue and even the 25% surcharge tax. So based on the numbers, it seems very ambitious to see a 50% increase in tax revenue. And again, VAT has, the rate for VAT has not changed. It's still at 8%, other than for banking and financial sectors where there is a 3% increase. So that will also contribute towards the increase on taxes from goods and services. Moving on to the composition of government revenue, as you can see, a large part of the government revenue is coming from taxes. And Winston Churchill, of course, said that trying to tax a nation to prosperity is like a man standing in a bucket and trying to lift himself up by the handle. So therefore, of course, increasing taxes or increasing government revenue through taxes alone will not be definitely a solution to growth and prosperity. But of course, it is one of the main sources of revenue to the government. And just like Dr. Selanayaka mentioned, the government needs to look at other revenue sources that will help bridge the budget deficit and not just focus on tax revenue. And interestingly, even the non-tax revenue is anticipated to increase. And there are a significant amount, according to the budget speech, more than 300 state-owned enterprises. And there are, according to the Minister of Finance, 670 billion has been invested in these state-owned enterprises, and 75 billion a year is incurred as expenditure to maintain these state-owned enterprises. So it is definitely a welcome move that the government has looked at this sector and has proposed that a committee will be set up to ensure that these bodies or these state-owned enterprises are run with a more profit-oriented motive. I mean, all these enterprises should technically be profit centers and not cost centers. So it is definitely a welcome move that the proposals are going to look at these state-owned enterprises, and all these entities have a significant amount of resources, especially in the form of land in prime locations. And so Therefore, it is definitely something that the government should look at in order to increase revenue, and maybe a public-private partnership with these state-owned enterprises with a more profit-oriented approach should hopefully increase the non-tax revenue of the government also in the coming year for 2022. So there was bridging the budget deficit is a very hot topic, and like Dr. Senanayake said, a very difficult task to do, considering that tax to GDP is currently at 8%, and it is to be increased to 10.7%, mainly through the surcharge tax of 25% and also the social security contribution at 2.5% on turnover. So as you can see, on based on the numbers, total expenditure still exceeds total revenue, which means that we will, of course, have to depend on borrowings. And like Senanayake said, the percentage of interest against the total revenue is significantly higher. So based on the budget proposals, how the government is trying to bridge this is mainly through increasing of revenue and also rationalizing of government expenditure. There was a significant amount of proposals that have been brought in through the budget to rationalize the expenditure. So I believe bringing in more efficiency into the government sector and also stamping out corruption probably would be one of the key highlights in making sure that the government manages its budget or expenditure effectively. And then there is also one of the key things in doing this would be to introduce more technology and more computer systems that can be integrated, because we have different state institutions having their own computer systems, whereas a more integrated approach where each state institution can operate on a common platform would help avoid tax leakages and also bring in more transparency. And that's basically, I think, one of the key things that the government should currently focus on is to introduce more technology in order to bring in that efficiency in the administration. So we saw, according to the budget speech, there are significant proposals that have been introduced to introduce this technology and then integrate it. Even the RAMI system, according to the speech, has not been fully implemented, even though it is in place. That is the computer system that is being used by the Inland Revenue Department. So therefore, technology would definitely be one of the key areas that significant changes have to be made and investment have to be made in order to ensure that the expenditure is rationalized and we are on a path towards actually reducing the budget deficit. Dr. Senanayake mentioned that by 2028 we should have a balanced budget. According to the speech, these are their projections. They hope to reduce the deficit to 6% in 2024, 4.8% in 25, and then by 2028 to have a balanced budget. So definitely this is a very ambitious target and would require a significant amount of financial discipline and also commitment by the government to lower their expenditure in order to make the economy more sustainable and also for the economy to have growth, for Sri Lanka to have better rankings and ratings. So this is a good proposal, provided that there is strong commitment to ensure that this actually takes place and we reach this goal in 2028. So that's a little bit about the numbers on the revenue side given as a whole. And I'll now move on to analysis of how each of these taxes have impacted different industries. So the single largest contributor towards the increase in tax revenue based on the revenue proposals made is the surcharge tax of 25%. Now this is a tax, like Sarah explained, on the high income earners, where they have to pay a 25% surcharge tax if their taxable income is more than 2 billion for the year of assessment 2021. The data that I'm presenting on this table is only with regard to listed companies, because that's the only information or data that is visible. And of course, there are other companies that are not listed, which will have to pay the surcharge tax. But my analysis is limited to listed companies and roughly how much they would have to pay. So based on the numbers reported for 2021, that's financial year ending 31st March 2021, the biggest hit would be on the banking sector. Of course, almost all banks are listed in the Colombo Stock Exchange, so that will probably be why the numbers reflect that they would be the most affected. So I have the rough estimate is about 18.6 billion would be the cash outflow as surcharge tax from the banking sector. And next we have food, beverage and tobacco sector. Largely Ceylon Tobacco would be, it will be the single largest taxpayer of this particular tax based on the numbers reported. And then also next we have the non-banking financial institutions. So like I said, there will be other industries that are impacted, exports, manufacturing, but unfortunately the numbers are not available because they are privately owned. And this analysis is only limited to the listed companies. So only about 30 plus listed companies would be affected. And based on the list of the 62 companies that are going to be affected, that's just half. So just a snapshot of what the cash outflow would be from each industry is what this table is currently showing you. So I'm just going to take you through sector by sector taxes that impact each sector. I have plugged in banking and non-banking financial institutions together because it will be the same impact to both industries. They will be affected by the 25% surcharge tax, and then also the increase of the VAT on financial services from 15% to 18%. So interestingly, like Sarah mentioned, this cannot be passed on to the customer. So which means that it will have an impact on the margins in this industry. So it's not just this, it will also be the social security charge at 2.5% on turnover. So a lot of the changes made by the revenue proposals will have an impact on the banking sector, and how this is going to be factored in, especially the 25% surcharge tax, is yet to be seen, especially considering that it is for a past period and the financials have been finalized and dividends have been paid. How this 25% is going to be reported, how it's going to affect the banking industry, how the financials are going to reflect this, or will all have to be deliberated on, because it is a retrospective tax. Another industry that has been highlighted in the budget proposals is the telecommunication industry. According to the reported numbers, both Dialog and SLT being listed companies, the reported numbers show that both companies would be subject to the 25% surcharge tax, and then social security charge. Like Sarah said, we don't know whether they will provide any exemptions, but if not, that will also be slapped on the telecommunication industry. And then we have the special goods and services tax also coming in for the telecommunication industry. Now, the rate hasn't been specified for this tax. Therefore, it's not clear as to how this will impact, or it's difficult to work out the numbers. Of course, the total expected revenue has been indicated in the proposals, but not the tax rate. So, and also there is an issue as to the special goods and services tax, because currently we only have VAT. So, goods and services tax would have to come in as a separate legislation. And then again, whether it's a cascading tax or whether it's only on top line, all of that has to be looked at, especially in light of the fact that it's going to affect large industries like telecommunication and other industries that are covered under goods and services tax. And something that is very promising, or something that is very useful currently, is the proposal that there'll be an improvement in the telecommunication network in the country. Given the pandemic, everyone is working remotely and there's so many online services being provided. And in the current context, this is definitely something that we need, especially for Sri Lanka to move ahead, and especially in light of the pandemic situation. This is a good proposal. And of course, the auctioning of telecommunication services licenses and 5G. This is hope. It is a hope that this will bring in more transparency, and licensing will be done in a more transparent manner. Like in every budget, tobacco and alcohol has been also addressed. Probably because of its inelastic demand, and the 25% surcharge tax will apply to CTC, distilleries, plant brewery, based on the numbers, of course, that has been reported because they are listed. And social security contribution also will have an impact. Like Sarah mentioned, excise duty, increase in excise duty will also have an impact, and the special goods and services tax. Agriculture and plantation sector, of course, there are no tax changes or tax proposals. The exemptions for agro-farming will continue, agro-processing will continue to be at 14%. But there are proposals to make investments in the agriculture sector, especially in respect to fertilizer and organic pesticides. And like Dr. Senanayake mentioned, there is a proposal to introduce high-tech agro-parks, so to use uncultivated lands. And something that was quite a little surprising was that they're going to bring in laws to introduce how land should be owned by plantation companies. Now, it's not actually only limited to plantation companies. The proposals say even to other companies and individuals, but I've just restricted it to plantation companies because my slide only looks at agriculture sector. So laws on how to use land is always tricky, and we'll have to wait and see how it is drafted, because its land ownership has led to revolts. So therefore, the government trying to regulate how to use your land can be tricky. So this is something we need to watch out for and see how the government hopes to regulate the use of land by way of laws. Exports, again, no significant changes have been made. Export will continue to be taxed at the concessionary rate of 14%. But then there is a lot of proposals to facilitate exports, where the government proposes to bring a special finance bill to ensure safety of local and foreign exporters. And then there's ease of facilitation through the customs, through a single window system. And currently something that is affecting the export industry significantly is the regulation on converting foreign currency into LKR. This has not been mentioned in the budget, or nothing has been kind of changed with regard to this, or there are significant issues in this regulation for exporters, practical difficulties, but the proposals have not addressed any of those, and basically doesn't mention anything with regard to this. So it's believed that this conversion of foreign currency to LKR would continue. Power and energy, again, government wants to bring in renewable energy. 70% of the aggregate electricity demand is to be supply through renewable energy by 2030, which is a very ambitious target, considering that we are heavily dependent on fossil fuels for power generation. Again, tax concessions have been given for the power generation through renewable energy already, so those will remain unchanged. The proposals are that investment opportunities in the energy sector will be opened up to the private sector. So those who are looking into making investments in the energy sector, there will be opportunities coming up, and it will be mostly in the renewable energy sector, and therefore that's something to be looked forward to, especially considering the climate crisis that we are currently facing. Tourism, again, nothing has been specifically mentioned with regard to the tourism sector. They are currently enjoying the concession rate of 14%, which will continue. Basically, at one point after the Easter tax, of course, there was a reduction in the VAT rate that was applicable to the tourism industry, but no such concessions have been given in the present budget, even though tourism has suffered significantly given the pandemic. There's also a leisure license fee that has been introduced. The rates haven't been specified, but certain designated areas are to be developed as special zones for leisure activities. So that will, of course, attract a leisure license fee. Tourism, of course, is on the rise. So hopefully things should settle down, and they should be one of the key contributors of foreign currency to the country, hopefully in the near future. Motor vehicles, a lot has been mentioned about motor vehicles in the budget. The special goods and services tax is to be imposed on this sector. The rate has not been specified, and like Sarah said, fees will be levied on motor vehicles that are that meet with accidents, and also on modification, upgrading, and refurbishment of motor vehicles. So motor vehicles again has been focused on, and several proposals have been made in respect to that currently. Those are the key highlights from a sectoral perspective, and they are basically a rough idea as to what the government is proposing with respect to revenue and how it's supposed to, how it plans to bridge the budget deficit. So proposals and laws are only as effective as they are well implemented. So therefore, I hope that all these proposals will be implemented in the spirit that it has been introduced, and it will take Sri Lanka forward and make Sri Lanka a prosperous nation again. Thank you. Ashay, over to you.
Yes, thank you, Dinusha and Sarah, for the very lucid presentation on the budget proposals presented by the Honourable Minister. So now we can commence the panel discussion, and we have put together a panel consisting of individuals representing the regulator, subject matter experts, as well as business leaders. So I would now like to introduce very, very briefly the panelists and request them to switch on their cameras. The first panelist is Mr. D.R.S. Hapuarachi. He's the Deputy Commissioner General, Tax Policy, Legislation and International Affairs Secretariat at the Inland Revenue Department. He has over 34 years of experience working in the Inland Revenue Department. He has a master's degree in Taxation Policy and Management from the Keio University in Tokyo, a BCom degree from the University of Colombo. He has also published many research papers on taxation. We warmly welcome you to the panel. We also have Hasita Prebaratta. We all know him. He's the Group Finance Director of the Brandix Group. He's responsible for overall finance and strategy function of the Brandix Group. He's also the MD, the Managing Director of Brandix India Apparel City, and holds several directorships, including TJ Lanka, which is a listed company. He was also a director of the Bank of Ceylon, a committee member of the Ceylon Chamber of Commerce. He has also been on the board of SEMA Sri Lanka and /MB. He was an MBA, a BSc, and he's a fellow member of SEMA and ACCA UK. A warm welcome to you, Hasita. Mr. Nilanthi Sivapragasan is the Chief Financial Officer of Aiken Spence PLC, a diversified conglomerate listed on the stock exchange. She is a fellow member of CA Sri Lanka and SEMA UK. She is currently a board member of the Taxation Steering Committee and the Accounting Standards and Regulatory Reporting Steering Committee of the Ceylon Chamber of Commerce. Sarah and Dinusha have already been introduced, and the final member on the panel is our managing partner, Mr. Sujiva Rajapaksa. He is also the chairman of People's Bank and People's Leasing. He has been a past president of the Institute of Chartered Accountants of Sri Lanka. We warmly welcome you, sir. If all the panelists could switch on their cameras. So to start off with, I would like Hasita, if you just would like to give us your initial take or remarks on the budget proposals.
Thanks, Ashen, for that introduction and inviting me to join this session and to share some thoughts on the budget presented last week. So first of all, I think in a nutshell, when you look at the overall framework that the budget has been spelled out, it is that not increasing taxes for the small and medium-sized companies and attempting to recover the relevant increase in expenses via the larger companies. So versus also the other social contribution that we are talking about is quite a contrast difference in terms of large, because 120 million rupees per annum is not so large in the overall context. So that's something that need to be looked at, and using some of these funds to look at certain relief measures and the welfare measures that are needed across the economy. From especially touching on the export sector and the apparel and related areas, I think there aren't too many specific proposals that have been outlined, though there have been references in the budget speech multiple times about the exports, given the importance of exports at this stage. But surely, I think the view from the government side is to ensure that the export industry is supported to ensure that the much needed foreign currency challenges are being overcome and sorted out with the medium-term plan. So in that light, I believe that some of the measures that have been outlined, which I will probably talk about a little later, will give, when we detail out to the specifics, will give certain specific advantages and also some level of growth to come in. But again, these are difficult times, and government itself is going through a major challenge in the tax revenue collection. So obviously, I think there has to be some form of a win-win partnership between the government and the private sector that need to come through if this benefit need to be, or the budget need to be managed and the benefits need to be shared among the wider community. But overall, in a nutshell, I think how I see the budget is that it has kind of attempted not to increase the taxes of the small and medium-sized companies to a great extent, and looked at plowing in as much as possible from the larger organizations or larger areas which have been defined in a slightly contrast way, but then again using that money, passing that on to the downstream and certain relief measures, etc., to be funded through that. The bigger challenge I find is that there is a lot of areas in all the speeches today and in some of the presentations I've been before, is that a lot of clarity is needed from here to the implementation, because so many statements have been made, so many one-off kind of, very little detail have been spelled out in this. I'm sure Mr. Hapuarachi can elaborate. I'm sure there is a method to the madness, but obviously those need to get into action will take time. So 1st of January, 1st of April, and maybe the timelines are not far away. So I think it's very important that some of these areas are being discussed and specified. Because be it the surcharge tax, be it the 2.5% additional social contribution tax. So all these are, there are a lot of open areas. We saw Sarah's presentation has more open areas than specifics, right, or confirmed areas. So these open areas to be closed and put it into implementation is very important, because all budgets in the past we have seen the implementation has been the challenge, right? Proposals comes nice and nicely worded, but reality is that when you go to implement, it takes time and it takes a lot of challenges to really pass through to make it a realistic way forward. So that's the initial thought, Shane, from my side.
Thank you, Asita. Now I would like to move on to Mr. Hapuarachi, who is the Deputy Commissioner General at the Inland Revenue Department. What is your initial take on budget, Mr. I'm sure your department would have had an input into this budget proposals.
Okay, thanks, Ashen. Good morning to everybody. And actually, this is a great opportunity for me to work with video, and especially with Sujiva after a certain period of time. Actually, video has helped Inland Revenue to arrive at correct tax liabilities in so many cases. And also, not only that, I know Sujiva personally helped so many other matters also in the Inland Revenue. So it's nice to be here in this forum after some time. Okay, so yes, now every nook and corner, we hear that there are many changes in the tax system. And sometimes it's thought that there are no revenue proposals much. Okay, then as Hasita just explained, we have to draw your attention to some facts about budget. When this government came to power, actually a lot of tax cuts, tax breaks were given, thinking about the future. So I remember one or two occasions I have to say that it's a gamble. So anyway, so the government is still paying this with sort of ambition, giving sort of benefits for the taxpayers as well as the general public. So initially, as we thought about the background of the budget, we can think that yes, the thought or the objective was not about the short run, of course, about the medium term or long term prospectus were the expectation of at the outset of this government. Okay, so still the same thing is continuing. Actually, when these tax cuts were there, thinking about the savings, investments, and job creation and so many other things, the pandemic was not that up to this level, right? So it also affected us. But anyway, with not to have so many changes in the tax system is, as I see, that the government is having sort of consistency. So as you know, one of the basic principles of taxation, the stability, has been maintained in this budget too. On the other hand, government needs money. That's why.
Okay, thank you, Mr. Hapuarachi. Dilanti, you.
Sorry?
You can go ahead, Mr. Hapuarachi. Go ahead.
Okay. I'm sorry. Actually, I was actually, I just wanted to say that, yes, on the other hand, the government needs money. That's why a couple of revenue proposals this surcharge, whether it's surcharge tax or surcharge. Normally, actually we used to have surcharges earlier also, but now we have a surcharge tax instead, and also several other proposals have also been introduced. So yeah, as the initial remarks, that's only I have to say here. But maybe if there are some specific questions or anything, we can discuss within the panel discussion. Thank you very much for this opportunity.
Yes. Yes, thank you.
Yeah, thank you.
Thank you, Mr. Apwarach. Now we move on to Nilanthi. Nilanthi, you represent a very, very large conglomerate. What are your comments, your remarks, Nilanthi, on what was presented on Friday?
Thank you, Ashen, and good morning, everybody. At the outset, I must thank Sujiva and the partners of BDO for inviting me to this panel discussion, and also to Sarah and Dilusha for giving us enumerating so clearly the budget proposals and the taxation proposals. As I said, I think Sujiva talked about it earlier. There were many expectations and speculation that there would be far-reaching changes in the budget on tax rates, reintroduction of pay and withholding tax because of the fact that the government required revenue. But I'm very glad that the government has maintained consistency as promised and not made any changes to the corporate and personal tax structure. And it certainly helps companies like ours and also so many others when we make our strategic plans, that there are no sudden changes in the entire tax structure. So they have maintained the stability. And as mentioned by so many of the speakers before me, they have also spelled out the broad policy direction in terms of shifting the economy gradually shifting from a trading economy to a manufacturing economy, with the identification of special industries such as pharma, textiles, and many others, which is a very good thing, and it is something that we from the private sector do appreciate. The creation of specialized zones for manufacture, like the Eravu Fabric Park, which has already been set up, and also other zones for pharmaceutical industry and all of that. Then, of course, the hub concept, then the single window for concept for facilitating imports and exports, and also the grading of businesses, where they would involve the chambers and private sector organizations to help the government grade businesses in terms of the concessions or the facilitation that they would be given for their imports and exports. Then also something that is a very welcome move is expediting the implementation of the digital platforms, because that is something that there is a crying need for. And so many other things like the business registration fee, which I won't go into detail. But one comment I must make is, while these policies are desirable, what is important is the implementation of these proposals, and that was mentioned by Hasita as well. And I feel that it would be good if the ministry could invite people from the private sector who have the practical experience to contribute their ideas when formulating the regulations. And I certainly appreciate the comments made by Dr. Kapila Senanayake in his opening remarks, that they will engage with the private sector in implementing the proposals. Then, of course, on the other hand, while all this is regarding the stability and the future direction, there have been certain new proposals brought in to collect the much needed revenue of the government, as Mr. Hapwarachi just mentioned. And ladies and gentlemen, as they say, old taxes never change, they just get renamed. And we can see that some of these taxes have been implemented in the past and now are coming back, turning up like bad pennies, but with different names and slightly different forms. So while we understand that the government needs to replenish their coffers after a very challenging year and a half, probably due to additional expenditure on the pandemic, which has prompted the imposition of one-off taxes like the surcharge tax and the VAT on financial services, The social service contribution, which is revenue based, could be rather unpalatable to businesses who have already been battered by the impact of the pandemic. And even on the surcharge tax and VAT, we hope that these taxes will actually be one-off and not be continued as we have seen sometimes in the past. And the social service contribution also, we hope it won't continue, because it just will negate what the government did by abolishing NBT in the end of 2019, if this continues. Then, of course, I think there's nothing very much that has been given in terms of the tourism sector, because they have been significantly affected. So I will go on to anything further. Those are my initial comments. But if there's anything further, I can take it up at the questions time.
Right.
Thank you.
Thank you, Neil. The subject of social contribution, security contribution, which is 2.5%. What is the impact of that on your group? Is it a small impact, or do you
Ashen, at the moment, I can tell you it has a very significant impact from my initial sort of calculations. And of course, as it was mentioned, the details have not been spelled out. Now, when it came to NBT, there were certain sectors which the government considered important, for example, exports, foreign currency generating sectors, which were exempt. But in this case, we are not sure. So that is what we have to wait and see what the impact will be. Of course, the micro and small enterprises have been left out because of the threshold of 120 million turnover. But if it's applied across the board, it's going to cost, a lot of companies, and also it will have a cascading effect, because it's just going to be a tax on tax. The prices are going to go up. So this is something that the government seriously needs to look at, and so many industries like which we are in, like the freight forwarding, logistics, the transportation sector, airline GSAs, they work on very thin margins. So you have to identify what is really their revenue. And even in the tourism sector, who are just kind of raising their heads with after the pandemic. When you talk about travel agents, destination management companies, if they have to pay this 2.5% on their revenue, when they have so many costs like the hotel stay and all of that, the hotel costs, which are also will be charged with this 2.5% levy, that could have a serious implication. So I think that's something we need to, the government needs to take into consideration when they're drafting the laws.
Right. Now, there are a few technical questions on this on the social security contribution, which I would like to pose to Mr. Hapuarachi or Sa. The first one is whether this is applicable on the turnover. I think yes, isn't it? It's a turnover tax of sorts, isn't it?
Yes, so the social security contribution is a turnover tax. It has, based on what was proposed, it has been introduced on turnover. And like Nancy said, we don't know which sectors are going to be exempt and whether it will apply across the board.
So is it a company where the turnover exceeds 120 million, or if it meets the 120 million threshold, are they also liable, or should it exceed 120 million?
According to the proposals, the turnover should exceed 120 million per annum.
Right. Okay. So the next question is to Mr. Hapuarachi. Mr. Hapuarachi, this social security contribution, can this be passed on or collected from the customers? This is another question that our clients would like to know.
Yeah, that is
your mic is on mute. You may have to unmute your mic.
No, mic is okay. I unmuted that. I don't know. Can't you hear me?
Yes, sir, you're audible.
Yeah. Okay.
Can hear you now.
Yes. Sorry for the technical problems. sometimes it disturbs what we are, to our thoughts also, what we are going to say also. But anyway, what I wanted to say is that normally, you know, all turnover-based taxes are tax. Therefore, there's a possibility for, for the payers of this, the collectors, payers being the collectors from the consumers. Probably that can happen. But if the law is drafted to say this, or maybe to provide strictly as to be borne by the payers, that also can be tried. But anyway, can you remember what happened to the NBT at past? So it was introduced in 2009 as to be borne by the payers, but finally it also became a type of indirect tax. So my answer, short answer is this will be a turnover tax, and most probably be maybe indirect, and the burden will be mostly, I'm not sure, but according to the law must be made. We don't have still, it has not been spelled out, but let's see. As we feel, it should be like that.
Mr. Apwaraji, now,
you know, there
Yes.
could be some kind of
Can't hear. I'm sorry.
go ahead.
Yep.
yes, sir. Mr. Apwaraji, now on the surcharge tax, which is 25%, I believe, on taxable profit. Now, most of the companies as of now have already paid their tax liabilities for financial year 2021. The return will be submitted in a few weeks' time. So, in certain cases, they would have paid out dividend. And they may face cash flow difficulties because the solvency tests sometimes have to be, you have to pass the solvency test. So for those sort of companies, this surcharge tax, will it be will the taxpayers have to pay it in one installment? I can remember the super gains tax. It was possible to pay it in about 3 installments. So are there any concessions on the surcharge tax, on the payment of it? Because it's going to be a significant cash out.
Okay,
which was not planned. Which was not planned.
Yeah, I think now I can answer that. So I think your question is also having the answer. It's a future matter. So all the proposals were just introduced. So when I think even the DG Dr. Sayanak also mentioned that he will take work with the private sector, and of course when the law is drafted and when the changes are made, I think mostly it will be for the Inland Revenue Act, as I understand. But whatever it is, I think sort of a consultancy must be going on, and the issues, the tax, the legislation should be drafted with the minimum issues, right? Probably we are talking about, the issues like you mentioned, and also about sort of economic double taxation. So these things must be looked at the policy level when it is drafted. That's my answer for this.
Okay, thank you, Mr. Apwaraji. The next question is to Mr. Rajapaksa. User as the People's Bank, and now the financial VAT has been increased from 15 to 18. How, in your opinion, will this affect the banking industry? Because there is a 25% surcharge as well that needs to be paid.
I think to my mind, there's going to be the fairly significant impact. Why do I say that? Because I cannot, I'm wearing a hat as a People's Bank, side now. I cannot pass it on to a customer. But again, you need to understand banking industry is concerned. What is more important is NIM, that is net interest margin. So then probably bankers might try to adjust net interest margin to cover that 2.5%. So as a result, probably the cost of the interest rate might go up. So, or on the other hand, the government or the budget proposals, throughout the budget proposals, I think Honorable Minister was talking about the efficiency, savings, and many more things. I think we all will have to look at even People's Bank, of course, is the largest bank with digital platforms. We need to make sure that we utilize those platforms and to have more and more virtual kind of office, the branches to reduce unnecessary costs. By doing that, I'm sure we'll have some kind of comfort. But again, factoring in that we cannot pass it on to a customer, but we may have to manage within our own parameters. But again, there are two aspects. One is about this 2.5%. The other one is about 25% additional. So looking at from my bank point of view, yes, there's going to be again substantial impact, but which will have an impact to our capital adequacy. It's not only us, most of the banks, sometimes capital adequacy is fairly tight. So bankers will have to, or even NBFI sector will have to seriously look at and see how we are going to sort out this issue, because capital adequacy is something that you cannot compromise. Ashen, I hope that I have answered your question.
The other question that we all face, especially exporters, is that we have this huge foreign currency shortage. So do you feel, sir, that this issue has been addressed in the budget proposals? I would like Hasita's input also on this, as you all are a very large.
Let Hasita to first give us, because I am being a banker here. We had the most difficult receiving. Let Hasita to answer first that question, then I'll take on. Hasita, I hope you are okay.
Yeah, I was waiting for you to go first. I think, Ashen, budget is not a document which will solve all the problems in the economy or in the country. So I think, first of all, we need to lower our expectations, because there were a lot of expectations that every problem in the economy will be solved by the budget. So that is not possible, in my opinion. And central bank has given, governor has given a roadmap about 2-3 weeks before. And it outlined how the forex side of things need to be managed more on the monetary policy side versus the fiscal angle. So my opinion is that these two should not contradict, which I didn't see any major contradictions as such. But as long as they don't contradict and they work parallelly on the monetary and the fiscal policies independently and converge where it's necessary and complement each other, that should be the way forward. That is point number one. And also from an exporter's point of view, how I'm looking at the budget, there are a couple of things that have come in mentions. There's $1 billion rupees being allocated to spend on export promotion, especially looking at the international market access. Where in that context, though it's not specifically spelled out in the budget, I assume that one of the initiatives related to that would be the expansion of the conversations around the free trade agreements, particularly with China, India, even with Japan for that matter, which we know that they're going happening at the back end, and even UK, we will have to get in, given with the Brexit, UK got out of the European Union. So these FTAs are very important from exporters' perspective to stay competitive, because our competitive countries like Vietnam, Bangladesh, etc., have gotten these duty-free access to these markets, and it's very important that that area is being covered. It doesn't need a lot of money per se to be allocated from a budget. It's more from a policy and a strategy perspective to fast track with a timeline and look at how we need to get through to these markets duty-free access, because not only for apparel but even for the other exports, this will be a crucial part. Then also they spoke about handloom and other areas as well in that, but more importantly, bringing in new products within the apparel space and other manufactured merchandise exports point of view, it's very important because at the moment when you talk about where we are, majority of our products are in the commodity segment. So if we go up in the value chain, make new product innovations, invest into R&D side, for which there is a 200% capital allowance but that has been given by the previous budgets, which continue till next year. And I think we are expecting that that will be further extended to the future as well, not just stopping next year, but taking it beyond that, so that the product innovation can be encouraged. And the other point that I want to touch, which has been focused in the budget, is to make the raw material and have better vertical integration in the country, so that the value addition in the country will be more and more dollars will stay in the country. That's the primary theme there, which is a good thing. And in that context, I think 5 billion rupees have been allocated to fund the Erabur and some of the other industrial parks, which is good, new industrial parks. But my also thinking is that there has to be an expansion into some of the existing parks as well, like the Sitawaka Industrial Zone, Biagama Industrial Zone, which is dying for water capacity, water discharge capacity and water intake capacity. If you get that, there will be a lot of low-hanging fruits at the moment, particularly from apparel side I can talk, because a lot of push is there from the global buyers to localize the fabric. And for you to do that, you need that additional capacity. So if you expand the capacity of the existing zones as a priority, which I know BOI is working on it, I think that will be fantastic to get a quick boost to the exports, because 3 to 4 years it will take for a new zone to be set up and things to go on to meaningful numbers. But the existing zones need expansion, and for that certain amount of that 5 billion to be allocated would be interesting. So those are a few points I wanted to touch Ashwin, covering the export angle as well, which I think where the exports being an important one to a question, needs a little bit more of focus in terms of the specifics of the budget when it comes to detailing and outlining, which I'm sure is the intention, and the government has been very clear that exports is an important segment that we need to be promoted, and I'm sure that the specifics will come soon, and when it comes, it will outline better both short and long-term growth aspects for export side.
Ashamed to add, the Hasita's points, and there are a few things that looking at from banker sides, because you are aware that Sri Lanka lecture. Can you hear me?
Yes, we can hear you.
Can you hear me?
Yes.
Right. Because now industry, leisure industry alone, it was a $5 billion, the dollar industry, but where we, it went down up to even $20 million US. Imagine the, the deficit. Whether it is this government or any government will face the same thing. I think the budget speech talks about advanced manufacturing economy, which is also very, very important. But then again, in the short run, I do not know how we are going to do that, which is important. And 5 billion, yes, as Sajid said, 5 billion, the infrastructure development also important. Again, we need to understand more and more exports means more and more imports. So I think value addition is absolutely important for us to retain certain dollars here in Sri Lanka. The bankers are always trying to help their customers, but in our case, being state-owned bank, we have certain priorities, especially about petroleum, electricity-related stuff, then especially, the pharmaceutical and coal and many more things. I think we need to give, because those each import is about $20-30 million. So I think we need to have another important thing. I think the budget's proposals also touches on that, about this to get out with this Undial system, where our remittances are at about 7 billion remittances. Most of the things are being routed through these systems. I think we need to eradicate and make sure that those are being routed through the or the official channels. I think the government and the central bank, I must commend central bank also try to eliminate those, which is very important. I think by doing that, short run, I'm sure that we'll have some kind of comfort when it comes for the foreign currency and foreign reserves, Ashen. So over to you.
Right. The next question from the audience is to Mr. Hapuarachi. They say there is significant focus on large taxpayers in the budget proposals. There is talk of consolidating the large taxpayer unit and strengthening the upper corporate unit. Do you feel that these proposals will be effective in increasing tax revenue, because it's all in the implementation? Is this a priority for the IRD?
Yes, yeah, I think so. Short answer is that here, of course, even without this type of proposal, what I feel is that as the tax officers, as the government servants who are responsible for raising revenue for the government should work that way. Here, of course, there are a couple of issues with upper corporate units as well as LTUs. Even though now there are dedicated units for all these taxpayers, sometimes some issues with the system also there. The problem is that with the new Inland Revenue Act, now I think by next April everything will be okay. Right now there are a couple of issues about the years of assessment 2018 onwards. So yeah, with that, and also some sort of mechanism to prioritize these several units. I think most probably there would be a revenue increase if the plans are working well. So that's what we have to say about this. I think I answered your question at a macro level. I mean, yes. Asen?
There is another question for you, Mr. Apuarachi, on there is another question for you on the deadline for tax return submission. One of the participants wants to know whether there will be an extension to the 30th November deadline.
Yeah, of course, the extension. So the return submission dates cannot be extended. It is well written in the laws. But Commissioner General can take decisions whether it is possible to submit the returns even after the deadlines with the consultation of the MOF. So I think what I feel is that now the corporate sector have to file e-returns. So e-filing is there, but the problem is I think mostly with the individual taxpayers because due to the pandemic situation, some actually we couldn't get the returns printed in advance. There were some delays within the government press as it was hit by the COVID-19 at the current times. So yeah, I think most probably there can be, but still now the returns are being sent. My understanding is that even without the returns, taxpayers can compute their income, right? Because they are having their accounts, they are having the performance records about their entities. Then the return is received maybe even within 2 weeks. Prior to 2 weeks prior to the deadline or something like that, they can send that. That's my simple understanding. But as a whole, if it is impossible and needs that, of course, we can take a decision, and also in consultation with the MOF, we can do something like that.
Right, Sarah, now as a tax, the proposals contain many new suggestions to improve the tax administration and to increase efficiency of the tax collection process. Sarah, as a practitioner, how do you view these proposals?
I think the digitization is a very, what shall I say, welcome move, because that is basically the cornerstone on which I think the rest of the economy is hoping to bank on. Because as we all witnessed during the pandemic, there was quite a push from working on weekend motor models to remote working platforms. And the fact that the digitization is going to be 100% implemented will actually complement that for the corporates as well as the individuals as well. And even I think where individuals are concerned, they can also file their taxes online if they opt to. But corporates are mandated from this year to file the tax returns online. The online payment is also, as I mentioned in my presentation, a very convenient mechanism in making sure you get to make your payments without having to go to the bank or get your checks signed and things like that. So I think overall the strengthening of the administration, especially with digitization, is certainly a welcome move from practitioners' point of view.
Right. Dilution, now one of the very alarming statement was made by the Honorable Minister on Friday, where he stated that 1.5% of the GDP is lost in terms of tax collections, and this amounts to about 200 billion. Do you think these budget proposals are sufficient or adequate to address this issue where taxpayers evade or avoid or evade their paying taxes?
Yes, even I was quite shocked to hear that 1.5% of GDP is stuck in tax collection at the tax collection level, where this is definitely money that is due to the government. So, and then I think even Dr. Sinanayaka mentioned that there is a lack of compliance among the taxpayers. So, it's the lack of compliance. I believe one of the key reasons should be this, because any penal provision or any penal law is going to act as a deterrent to persons trying to avoid. So even when it comes to tax, if the taxpayer feels that there is no deterrence, and then you can get away with actually not paying tax, there would be no appetite to basically comply. And then there is also the concept of social justice. If the next person is paying, why should I pay? So it gives a very, very bad message to the tax-paying community and the country at large to actually hear something like that, where the collection is stuck and it's not being followed through. So I believe that, yes, the tax administration, there were a lot of proposals to strengthen the tax administration, and then this collection of taxes would definitely be a revenue source to the government. And given the budget deficit situation, I believe even the Internal Department should probably have more resources. Maybe if it's a lack of resources that is the issue. And even from a tax practitioner's point of view, it is good to actually have a strong tax administration, and even as a citizen, it's good to have a strong administration, because it ensures social justice where everyone pays their fair amount of tax, and then we enjoy the facilities that are being provided by the government or infrastructure that is being provided by the government. So otherwise we had the Finance Act coming in as a tax amnesty, and then certain taxes being waived off as well. So it doesn't give a good message, and I feel that more should be done in order to ensure that whatever the dues that have been recognized, these are recognized tax defaults. So whatever that has been recognized has to be collected, and a more stringent approach has to be taken to ensure that this money is collected by the government.
Right. Now, when you go through some of these budget allocations, you see the government allocating about 30 billion rupees to resolve all these teacher salary, principal salary anomalies. Then on the other side, you see the budget estimating a 30 billion saving on expenditure. So being the chairman of a state bank, I would like to ask Mr. Rajapaksa, is this feasible? I mean, are these estimations realistic? Can the state make a saving of about 30 billion by tightening its belt?
Culture in private sector and public sector or state-owned enterprises, Sachin, are completely two different things. just the 20 meters away from my office to People's Bank. When I go over there, I completely change my hat. Why do I say that? Because it's basically mainly, I think Apu will agree with me, unionized culture. The Honorable Minister talks a lot about efficiency, bringing new culture, and the KPIs, and the the work plan. Your budgets will have to be reviewed quarterly without waiting for any more. So those are there, but I have question mark. I'll be very happy if we can do that. Provided that other parties, because stakeholders, if you take even banking sector, unions play a major role. So when I am going to say, look here, I need your productivity like this and your efficiency like this. If not, I'm not going to continue your service and all that. They'll be up in arms. So this is I'm telling you the reality. This is the culture. So Hapu, I do not know how we are going to save that 30 billion, which is very good, very ambitious, but we need to do that. I will be the happiest person if we can do that. I know the amount of time, time, the wastages and many more things, I think. But everyone, I think it's possible also if everyone feels that we need to do that for the betterment of the institution and finally betterment of the country. I'm sure that, we'll be able to save this 30 billion. So that's how I look at Tashin.
Right. I think that's how we can conclude this panel discussion.
Don't we have one question for Nilanthi?
I think one of the participants have appreciated what Nilanthi has stated in terms of the hardships companies face.
Yeah,
I think there isn't a question there. I don't think there's a question there, just an appreciation.
Ashen, if I can just ask a question from Mr. Hapuarachi.
Yeah, please.
Yes.
This is regarding the social security contribution. Now I don't think the RAMI system at the moment accommodates that. So if this is going to be implemented, I don't know, but is it 1st of April that the tax is going to be implemented? How are you proposing to get the returns and, do the collection? Because is that going to be collected in a manual way? And you're talking about 140 billion. I mean, that is what the minister mentioned in the proposals, that they're hoping to raise 140 billion from that. This is just a thought, because, RAMIS has taken such a long time to be implemented. I think still it's in the process of being fine-tuned. Whether you can suddenly bring in a new tax like this, which is applicable across the board, and how effective it will be. That's just a question, Mr. Hapuarachi.
Yes, let the policymakers decide that. Just like the SGST, now the ministry is going to collect it directly. So whether Inland Revenue or the Customs or Excise or any revenue authority collects money, finally it goes to the exchequer. We know that, right? Therefore, if I think still that I feel still that the RAMI system, can quick work, with discussing with them and making the surface for that. But like some answers for the earlier questions about the implementation, of course, I think this issue, you are very correct. We have to do this as soon as possible without taking much time, right? All these proposals. So let's wait and see how we can work with that. I mean, the government institutions as well as the private sector, the practitioners. We can, join hands together and do something on this also. That's what should be happen.
Good.
Thank you, Mr. Hapuarachi.
All right, I think with that we can conclude this session. I would like to convey my sincere appreciation to Dr. Kapila Senanayaka from the Fiscal Department of the Ministry of Finance, as well as to Sara and Dinusha for so lucidly presenting or decoding the budget proposals 2022, and of course to all our panelists who took time off their very busy Monday morning schedule to be here with us today. I would also like to thank all the participants who joined us via Microsoft Teams, Facebook, YouTube, Sri Lanka and overseas. Thank you very much. And we look forward to seeing you again soon. Stay connected to BDO and stay safe. Thank you very much.
Thank you.
Thank you. Thank you.
Thank you. Bye.
Thank you.